Good morning, everyone, and welcome to the Morning Market Report right here on the Piper Academy Network, guys. We have a lot of green going on here on the daily, but as the thumbnail said, proceed with caution, guys. Liquidity Sweep Central in the past hour, everything turning back to red. We are getting some pretty hard rejection at a very critical level, two of them, actually. One is going to be this orange line that's running behind my head here. That is the 200-day simple moving average. Yesterday, we got a bounce here on the 300. I said, watch this level. In our Discord, we got a bounce there. I said, we're very likely going to head up and retest for an OC rejection on the 200-day simple moving average. I said, if we do get up there, I do expect that we will break it because we will look for a liquidity sweep on these levels, guys. We had that this morning. We got some CPI data, came in, gave us a liquidity sweep, jumped above those levels, grabbed it, and now we are heading back down. It's almost like I can read, the economy, the charts, and what's coming, guys. So, hey, strap in, brace yourself, and get buckled up. It's time to do it. You guys know what time it is. First, time for me to say good morning to CJ Taylor, my brother. Secondly, classes in session. Let's get it, guys. Good morning, everyone, and welcome to the Morning Market Report, the show where we break down the economy, the charts, the headlines, and everything you need to have knowledge, because knowledge is profit here at the Academy. But I don't do the show by myself. I've got my partner in crime, my co-host. Let's go ahead and bring him up. It is the OC guy. What's up, dude? How you doing, man?
Not much, just we're sitting back up just to stay in match with the hikes, because it seems like for some reason we always change there you go, the size of the cameras for some reason. I don't know. While mine is fixed, I can understand why. Maybe because I just lean in or lean out. I have no idea. But anyway,
there, I made you larger than life and moved you up in the world. There you go. You've been elevated, sir. Elevated.
Nice. Oh, well, I mean, that was an amazing call yesterday, Piper. It's just like if you knew about anything about trading, right? So
just a little bit. Just a little bit.
Just a little bit. Exactly. So, I mean, I think we're going to be having a little bit of a retracement. We need to be a little bit careful here. On the daily, we had our third red candle in chart prime. If you want to follow up with mine, I'm using 43 on my trendy. And am I not sharing the one, or am I sharing the proper one? I don't know.
Look at you. Look at you. You put yourself into the Inception OC. Are you fixing it?
Oh, I see.
You got it?
I see now what happened. Yeah, I got it. All right, my bad. There we go. Perfect. I was not sure what was going on. So basically, let's just get rid of Gmo. That gets rid of the flags. So by using 43, we have our first selling flag in here. Remember that we don't usually enter on those sell flags. We enter on the pullbacks for that movement. So we need to be a little bit careful now that we're heading up to this trend line right here. In fact, you know what? Let's log it and let's add an alert in here, and we'll have another analysis right when we are impacting that. Because if we go back into those kind of signals, look at how they're played out. Usually losing that dynamic reactor, then we go back up, entering for the short, and then usually that short plays out very nicely. Also with those signals on the buy signals, we wait for that retracement. But so far, seems like we are on our third bearish candle. A little worry there. I really want to see Bitcoin kind of like stabilizing. Although I've also talked about that I think that we're going to be doing this same movement of 2021, possibly. So I am expecting a little bit more downside on a, sloping down wedge.
Awesome. Big shout out to the Otterman, Alex O Crypto in the house with us. What's up, bro? How you doing, man? Yeah, he tried to redirect to us this morning at like 6:35 a.m. my time. I was like, bro, that ain't happening. I appreciate you. I have nothing but love for Alex O and his generosity of redirected to me, but we were not going live that early. I was still in my robe looking at headlines and stuff, trying to figure out what we were going to talk about today. But man, big shout out to Alex O. Big shout out to CCM too, Keith from Crypto Coin Mindset. We did a big show last night talking about biz knowledge. Yeah, but we're gonna break it down, bro. We're gonna break it down. I actually have a lot of economy stuff to talk about, and that's typically why I'm bearish. I'm very bullish on Bitcoin. I'm still dollar cost averaging every week, but I sold at 102.7, and I did a DCA reset. So. But yeah, so far, great call. But yeah, it's all based on the macro side, man. We did a show last night with Crypto Coin Mindset, Keith. It was BC Port Corp, myself, and Crypto Bedell, and we were talking about the possibility of recession with tariffs and the fears that are going on in the markets and stuff. So if you guys haven't watched that video, you should go check that out. But let's jump over and let's start talking about the CPI data that came in this morning. That's really what was moving the markets in the direction that they were moving already. And so let's go jump in on that and get that riding in here. Let me get everything sized. There we go. Perfect. Let's go over to the news and we'll be right back with you, OC. All right, here we go. It's time for the news. All the news that's fit to be news. Man, yeah, it's like yesterday, everything got adjusted. I don't know what happened, and now I got to adjust everything back. Here we go. So, does Piper know what a bull looks like? I do. I was a bull when I was buying Bitcoin at 21,420, man, and Ethereum at 975. So come on. I am a smart trader. I buy the bottoms and I sell near the tops. That's how you roll. Dano Crypto, what's up with you, bro? How you doing, man? Welcome to the show. Good to see you here. We might. Are you going live today? This morning, Dano? Let me know if you're going live in 53 minutes. If you are, we'll redirect over to you. All right, let's take a look here, guys. What we're seeing here, crypto risk indicators according to Into The Cryptoverse, our morning brief brought to you by them. Let's go take a look at what we have here. 30.7% on the risk summary. Social media risk indicators still pointing low at 14.49, on chain at 45.1, and the price at 31.9. Total market cap for crypto right now sitting at $2.677 trillion. The trend line's at 3.567 trillion. Undervaluation just under 25% now. It was up pretty high at 26 plus. It's now 24.94. That is meaning that we are undervalued beneath the average of the price action there for the market cap, for the total market cap. So right now sitting about 25% undervalued on Bitcoin. On crypto as a whole, Bitcoin right now sitting at 48.5% risk band. That means it's a 3 times your normal DCA amount type week. And we break all that down in our Discord. So if you're a member here on the channel, just a regular member, join down below, you get access to our Piper plan. It is the DCA plan, how we get in, and also when we take our profits and get out, because not a lot of people talk enough about how to get out of the market. So looking at stables here right now for Bitcoin dominance. With stables, we're at 61.28%. Without stables, we're at 66.93%. So that means a lot of money is still going out of Bitcoin dominance and into stable coins, guys, because we are still sitting at a greater than 5% spread here between stable coins and without stable coins for Bitcoin dominance. Let's go check out the Fear and Greed Index. That's the word. Line, please. Fear and Greed Index. Let's go check that out. See what it's telling us today. Let's go. We are sitting currently at a 34. We're still sitting in fear. Yesterday, we were in extreme fear, moving up another 10 points to number 34. Fear and greed starting to cool off a bit. Not seeing much price action move off of that. I saw you that you said you are. So, Dano, that's where we'll head after this. Let's go over and take a look at crypto bubbles. We'll look here first. Guys, crypto bubbles down on the hourly right now. Bitcoin currently coming in at about $82,800, up 2.4% on the daily. Guys, Ethereum, we talked about this yesterday. Of all the liquidation threats to Ethereum, it is down, despite all of this move this morning, down 0.1%. It's at $1,893. Remember I said I think Ethereum will hit $1,200? F Ethereum, OC says. I think that we will hit $1,200 Ethereum this pullback, and if we break below that into like the $1,100 range, we are looking at we are looking at a lot of liquidations. One of those big ones, the Ethereum Foundation, $182 million worth of Ethereum could be liquidated there. XRP, it is up 3.9% today at $2.19. BNB up 1.5%. Solana up 3% to 126. Cardano is up 2.5%, sitting at 73 cents, trying to hit that 75. Dogecoin up 4.9. Tron down 1.8. Pi Network, Pi Network. But it is up 18.9. I won't deny that, but it's still garbage. Will not KYC on that main net. Leo token up about 0.1% here at $9.71. HBAR 1.5%. Chainlink 3.8% at $13.31. Stellar Lumens moving along with XRP up 2.2 at 25 cents. Avalanche up 8.1. Nice move on Avalanche there. I know some people were getting in on some long trades on that I had seen. And so shout out to those guys because they are doing pretty decent right now on that move. SUI has moved up one more spot again to number 17. It is up 4.7% at $2.26. Shiba Inu losing that spot to SUI. It is still up 4.3% on the daily. And then Litecoin at number 19, up 2%, $90.25. Bitcoin Cash rounding it out, up 2.6%. Where is Caspa? Where is Caspa? Let's go find Caspa. Caspa, where are you? Caspa's all the way down to number 48, guys. It is up 4.9%. I saw somebody in the chat talking about it, up to 6.9 cents, trying to fight 7 cents there. Let's go take a look here. Let's give a refresh here on the TradFi side, and let's look at this U.S. market open about 40 minutes ago now. Dow Jones is now pulled back and is down 0.3%. S&P up 5.58%. And the NASDAQ, where most of the gains are being made today, is in the Mag 7, the tech sector. It's up 1.43. So Russell 2K, small caps up 0.17. And that VIX is starting to slow down, guys, but still above 20. I told you, when it's above 20, don't trust the markets. Volatility index is pulling back a little bit today, down 4.86%, but still sitting at 25.61. What else we got here? Let's go check out the bonds because I want to show you what's going on with the 10-year. It's moving up again. And this is going to be the narrative of why I thought that we were going to see a liquidity sweep, and that was it. Keep an eye on the 10-year. I've said this once, I've said it 1,000 times. US 10 years, what you need to be watching big time, along with the VIX and 200 and 300 day moving averages. But right now it's at 4.318. Gold is getting a move up today. It's at $2,922, up a slight percentage today, 0.04% there. Oil, what is oil at? Oil is coming back up too, moving above that threat area of $60 per barrel. Economic calendar, guys. Let's take a look here. This morning we had the mortgage rates come in. Mortgage rates have dropped again, 6.67, but with that 10-year coming up, guess what? That's going to go up too, because that's what it's connected to, is that 10-year bond. Core inflation this morning, guys. Core inflation, this is the inflation number excluding food and energy, okay? So looking at this right now, it was at 0.4. No revisions, first of all. On CPI, we had 0 revisions. Thank the Lord. 0.4% was what it was at previously. Consensus and forecast was that it would be down 0.1%. Came in 0.2. Down 0.2%. Core inflation rate year over year was expected to be 3.2 on consensus, forecasted to be 3.1, was previously at 3.3, came in at 3.1, beat the forecast by, met the forecast, beat the consensus by 0.1%, came down 0.2% total for year over year. Inflation rate, this is including food and energy, was at 0.5. They thought it would be at 0.3, down 0.2% on forecast and consensus, beat it by another 0.1%, came in at 0.2, so down 0.3%. And then inflation rate year over year came in at 2.8%, was at 3.8, was expected to be 2.9. So it was a meet or beat pretty much across the board this morning on everything, guys. But what I want to talk about is this here. Because we have all this data, right? And yeah, that's great. But in the real reality, and shout out to Eric Wallen, because I know he loves this guy to death. Not sure he doesn't. But anyway, Caleb Franzen said, I want to be extremely clear. This CPI data, while extremely encouraging and a major win from the Fed's perspective, is not sufficient for the Fed to change monetary policy over the next 1 to 2 meetings. The bond market is still expecting 0 cuts over the next 3 months. Right now, we still have U.S. Recessionary fears skyrocketing on Google search trends. The GDP, Atlanta Fed GDP Now model, they are actually reporting that the Q1 2025 GDP will be down to 1.6%. I've even seen a lower number than that now, somewhere in the 2% range, negative 2%. However, the model adjusted for gold imports, which is not included in the GDP calculation, is tracking at 0.4. So if you adjust gold out of it, it's actually going to be up just slightly. Meanwhile, President Donald Trump, when asked about a recession on Sunday, he said, "I hate to predict things like that. There's a period of transition because what we're doing is very big. It's going to be bigly." They're doing it bigly, okay? Implying there will be some pain ahead. Additionally, Treasury Secretary Scott Bessent, I'm sure I nailed that, warned of detox period for the economy last week. Short-term pain for long-term gain, or short-term will turn out to be longer than expected. And so when you take a look at this data, let's just jump over here and talk it out. When you look at this data, we had better than CPI data that came out this morning, but it wasn't, revolutionary. They didn't like reverse to a level that is going to be, a whole percent or anything like that. For one. Two, we still have all of the other factors. Job cuts are still happening. Production is still down. GDP on the quarterly is still a thing. The tariff threats are not going anywhere. In fact, if I jump over to this shot here, I actually have this one right here that was being talked about this morning. Yeah, Canada said prepare for retaliatory tariffs on 30 billion Canadian dollars of U.S. goods. So, recession, the tariff fears are still there, scaring everyone into a frenzy, right? Top of that, guys, if you take a look at over the past 5 years, and let's just keep this in line with what we're seeing on that 0.2%. Okay, 0.2% increase. It's an increase still. We went up 0.2%. It just slowed down on its increase rate. You look here, price increases over the past 5 years. Medical care, 12.3%. New cars, 20%. Shelter, 26.6%. Food at home, 27.4%. Gasoline, 27.6%. Food away from home, 30%. Electricity is up 32.7%. Used cars, 35.1%. Transportation, 36.2%. Fuel oil, 41.9%. Gas utilities, 43.3%. Home prices, 52.3%. Auto insurance, which I know killed me on this past year, up 55.4%, and a dozen eggs is up 307%. So really, in the grand scheme of things, yeah, we got a slowdown of growth to only 0.2%, but are we really heading in the right direction? Has anything else changed at all? Job numbers, production, the tariff threats, the risk, everything that is causing risk off mentality and sentiment in the market. Is anything changing at all? No. Matter of fact, the sentiment is dropping much lower right now. I was looking at that one earlier, and I think I'll bring it back up here, and then I'll let OC get a word in edgewise because I am rattling on here with all this data. But guys, when I see all this data, I'm seeing a lot more bearish news than I am that 0.2% bullish news on the CPI this morning. And therefore, that's why I said when I saw it happening, hey, watch out for liquidity sweep. We talked about it yesterday. Proceed with caution. Is this data bullish? Yes. Does this data erase anything that has happened outside of CPI? Not at all. We are still in a bearish economy right now. It is contracting, and when economy contracts, risk off is the sentiment, and that means markets go down. So let's jump over here and take a look at this. U.S. consumers are saying recession is here. The share of Americans saying there will be fewer jobs over the next 6 months jumped to 26%. And sir, get back there. 26% in February. There it is. The highest in 12 years. This is higher than the 2020 crisis and in line with the 2001 recession. You can see here the overall index is the white line running across here, coming in at about 98.3. The view of the current economy is sitting at 136.5, but expectations for the future is down to 72.9. That is the U.S. consumer sentiment. And because of that, CPI data coming in this morning, not all that great to counter what we're really seeing with all of the other factors in the market. I hope I broke that down well for everybody. And I'm sorry for being the bear. Piper Bear does not like to be a bear. But this is part of the reason why I was bullish when I bought the bottom. I was bearish when I sold near the top. I missed it by about $7,000. So I'll take it. It's way down. It's down much more than that now from where I sold it. I started the DCA reset on a weekly basis because even if you had bought the top in November 2021, you still had exposure and you'd be up right now. So I started a DCA reset after taking all my profits. OC, 0.2% CPI. Does this change anything for you, or have I swayed your opinion?
No, I was muted. Almost got in that one. So, CPI data is very important, right? I mean, we cannot ignore that. In fact, you were cutting out the movements, or you were counting the movement or predicting the movement based on just one single big data analysis, right? Which is a fundamental analysis. So I cannot ignore that, but still doesn't change much for the major prediction of what I'm looking for. Not major prediction. I don't like to use prediction. I like to use I don't know, speculation, right? Because at the end of it all, we can only speculate based on data. But I would say that there's many other factors, right? We have tariff, we have unemployment, we have month over month, right? We have many other factors that might be not only affecting the U.S. economy, which is leading the way both now in technology development and also on crypto development, right? And we cannot forget, of course, about the global economy. I mean, the biggest companies out there are Americans, right? So this is something that's going to be impacting the world, but also how is China is going to be reflecting back on the tariff. Remember that right now China has said that they are ready to respond. If war is what is wanted, they are ready to respond and go all the way with it. I'm just calling out the facts, right? YouTube, I'm not saying anything political, just bring out the news, just in case. So I think this is still at the edge of the cliff, right? We need to be prepared for whatever is coming. And I'm not discounting at this point or ruling out a black swan event. I believe a black swan event could be happening, could be cooking. And if it's going to happen, breaking throughout the tariffs threats and maybe responses from other other powerful nations in the world might bring a black swan event. And I think could be something like the COVID-19, where we have a big sweep downwards and then a fast recuperation, right? So I don't think it's going to be that major, but could be happening right there. So despite it makes me feel more stable or feel, like the ground, the level ground under my feet, I still I am with the guard up still.
Yeah, and proceed with caution, as the title said today on the show. Proceed with caution. So a couple of questions here. First, Alex O said, I like orange swans. There you go. Never seen an orange swan, but Alex O, I'm going to go with yours. I like orange swans too. And then Roman Bray said, I was not trading the last time Trump was in office. Let's go ahead and throw this up here on the screen. I was not trading the last time Trump was in office. Do you think what we're seeing now will just go on for the next 4 years? No. I think what we're seeing right now is man, I really wish you guys would have seen the Crypto Coin Mindset show last night. It was really good because we talked about why we need to see why we need a recession, really. And I'm going to break it down for you right here. But I really encourage you guys to go watch the whole show from last night. If we jump over here and we take a look, I want to show you this. First of all, it's about this 10-year treasury bond. You guys can see this is going up, right? It's at 4.3%. The fact of the matter is that in the very not so far off future, we are going to have to either let our debt mature, which means we're going to owe a lot of money, or we're going to have to refinance it. Okay. In order to refinance, In order to refinance that, the United States needs that 10-year Treasury bond to go down. They need rates to drop, and they need it to drop quickly in order to refi at a lower rate. Because remember, when they financed them originally, we had super low rates. We were at like a 0% Fed rate for over a decade. And so in order to refinance that debt, we have to get it at a cheaper rate on the refinance level, right? If we don't, we're going to be we're already capped out on what our interest payments are. We don't want to see that happen. Therefore, the only way to get rates down quickly is either for inflation to drop very fast and jobs to go up very quickly in order to show strength in the job numbers, labor market, and strength in the economy via inflationary indicators. Okay, that's not going to happen. It's just not going to happen. That would require an absolute miracle to occur, and I just don't think we're going to see that. So the only other real way, is to give recessionary fear, or even possibly a full-blown recession from the federal government. We talked about this last night. Do I think that Trump is trying to force a recession? No, I do not think he's trying to force a recession, but I also don't think that anyone in the federal government is trying to legitimately avoid one, because they know it is the reset button for all of this stuff. So all the things that need to be fixed right now get fixed with the recession. We have one about every decade. It's what resets the economy, the U.S. dollar, and our really our strength as a nation in comparison to the rest of the world. So I think that 10-year bond going up today is a pretty good indicator that we will have something force that recession to take place. So we technically do. So you got to understand, U.S. debt is to the U.S. taxpayer, really, because they print treasury bonds for nations to buy and other, big institutions to buy, saying, hey, here's a promissory note, whether it be a 3-month bond, whether it be a 1-year, 10-year, 30-year, whatever. Hey, buy this bond. We'll give you this rate on it. This is a promissory note that we will pay you back. They print those bonds out and in lieu of our needing money. So we borrow money by selling you a bond with a promissory note for later. So it's not like we take out a loan. We sell you a bond and we owe it back at a later date. And so the United States, that's how they print money to pay debt. They sell debt for a bond. Those bonds get bought up with the promissory of this growth rate over a period of time. And then that is essentially printing dollars. So it's not like they literally go, we need to print $100 million more into existence. They sell the bonds to print that money. Okay. So that money comes in, that's new money into the system, and bam, there you go. So yeah, that's how that all plays out. So that's what the debt is. The debt really is getting paid back for the debt that the U.S. government has borrowed against on our behalf as the taxpayer without our approval. Go figure. So let's get into the Bitcoin chart. I think I broke that down simply enough. It is what it is. If it's difficult to understand, it's by design, everyone. And so I spend a lot of time understanding this stuff behind a computer. Matter of fact, one of our viewers here a little while ago, made a comment about a read, and he is absolutely 100% correct. This is a brilliant read. Let me find it here. And you guys need to go do this. Read this also. There it is. I found it. It was Darshan Baba. He said, there is no such thing as zero inflation with fiat currency. Fact. Inflation is part of design. Fact. Modern money mechanics, Fed publication, is an informative read. Absolutely, guys, go read Modern Money Mechanics, and you will understand the U.S. dollar a lot more. Probably one of the earliest things that I read on understanding the Fed, the Federal Reserve, and the U.S. debt-based currency so that I could then understand the economy. So it was a building effect of what I learned, and that was one of the first things I read a long time ago. I probably need to reread it. Let's jump over to the Bitcoin chart and let's talk about that, guys. So again, yesterday we were down here. Let me get the oscillator in. There we go. Beautiful oscillator. We're down here, and I said, watch this level. We put it out on our Discord. I said, guys, we're approaching support on the 300-day simple moving average. If we're going to get a bounce, this is the area to watch. Why? Because I labeled this like 3 months ago as Bitcoin's last stand. This has been on my chart for a long time. There's a bunch of other ones that I've turned off for right now, but this was on the way down to that level. Called Bitcoin's last stand. Yeah, key levels here. No, it's support resistance. That's what it is under it right there. So yeah, I've got a lot of other rectangles here that are turned off. As you can see, turn them all on. They were these levels that I was watching the closest, but I had this big gap that went all the way down to there, and that was Bitcoin's last stand. And it aligned perfectly as we were heading towards it with the 300-day simple moving average. As I said, we get a bounce here, guys. This would be the spot to get one, would be on the 300-day. But if we come up and we reject on the 200-day simple moving average, I would expect us to head down even further. We do have our lowest level here coming in at about 73,978. Ultimately, though, we do have a point of control for this entire period. I'll show all this on a higher time frame in a second. That's at $67,600. Now, keep in mind, I'm not saying this is going to be a straight down line. I do think that we're going to pay a visit to that sometime over the next few months, but I do think that we are going to get one more last pump up. I think that pump up is going to come in and hit into this quantum reactor and dynamic reactor range. That's going to be sitting between $86,000 and $89,000 range. I do think that we're going to hit that. You can see here on the 4-hour multiple times, this has been a rejection point for us. And then that's going to be another liquidity sweep above this level, because I said, if we break the 200, watch for a liquidity sweep. Well, as you can see here, that's line right here. That was the level, liquidity sweep, and then it started coming back down. So it played exactly the psychology that I thought was going to take place in the price action is what occurred there. Now let's go look at why I think that these levels are relevant down there. And then I'll show you why I think we will get a pump up. These levels that I'm watching here, guys, are coming all the way in off of this fixed range volume profile that goes back into February of 2024. So this is over 1 year old. Point of control is coming in at this dash yellow line at 67.6. Our value area high is at 86,461. And then down here below at 50,000 is our value area low. Don't think that that's a concern as of right now. There is some reasons in the crypto winter that I think we'll revisit down here, but that has to do with the retracement from market bottoms to market tops. Retracements have always, every single cycle. This is a 4-year cycle trend. Listen to me. Has always retraced back down to the 786. Current 786 right now on Bitcoin from its 2022 bottom to its 109 top that it set recently back in December. That is coming in at about 35,000. I think that's a crypto winter thing. Push that off to the back burner. We'll worry about that a year from now, okay? But as of right now, I am watching this level of the 200. I do think we're going to get a move up above that. Let's show you why. One thing is we're going to go over here and take a look at the CME gap. You guys know we went down. We closed the CME gap perfectly. That was on here. This was set back here in November 2024. We came down, wick to the 200-day on the futures, which was the 300 on the spot. Why? Because futures does not have candles in here all the time because they're closed on the weekends and the night. But we set, when we came down to close that here on Monday, Tuesday, Wednesday, we set up another CME gap to the upside, and that comes in at $87,000. What else is that in that range at $87,000, guys? That would be the 4-hour quantum reactor and dynamic reactor that we just talked about between 86 and 89. So we are looking at that level there to be coming in for a retest, and I think we could see that lastly because of this right here. Let's talk about this. Right now, we do have this liquidity sweep that we just did here, right? This was a heat map. Liquidation heat map came in. Shout out to TradeFly. He's been talking about this forever. We came into it, cleaned it out after getting a bounce down here on that 300. But if we put this on some higher time frames, guys, and take a look at what we're seeing up there in that $89,000 top range of the quantum reactor, what are we seeing up there? You'll see as soon as it loads. Thank you, Coin Inc., for being the slowest load ever. Shout out to Wix Wife 589, 2W in the house, DDT in the house. Yeah, exactly. 786 and 886. That is where it goes to, and that would be down to $35,000. Darren does things. He knows. Let's give this a refresh here because it's not wanting to load that on the monthly. We'll see if it loads now. But once it loads here, guys, you'll see that we have some levels up in that $89,000 to $90,000 range. I'll see if it loads in here. If it does, I'll bring it back up. But that is another reason that I'm thinking that we do get a retracement back up to that area. Could be an area where a lot of people that went, oh crap, I did not get out in time and I've rode this down. I'm not round tripping. Could be an area where you start to see some selling pressure up there again, also to make people want to get out of that market on that rally back up, that pump rally. So it's never ever a straight down thing, but I do think that we are heading for some rougher times on market price. OC, what do you got, man? We're at 835 right now. We got about 46 people in here watching, getting this alpha. What are you watching right now on altcoins? Because I'm sure with the retracement and the pump, alts did, a little bit better of a pump than Bitcoin, a little bit worse of a dump. It could be potential for them. Are you looking for shorts right now? Are you looking for longs? And what are you watching?
At this point, I'm kind of like a worry about what's going to happen with the altcoins. I need to see a little bit more stabilization. Something like, for example, ADA, pump and dump, right? We are just, there we go, ADA. We just pump and dump, right? Let's just wait for that dynamic record to load. But there we go. But at this point, we are also going back and forth, back and forth, back and forth. So I need to see bottoming down or bottoming up here, somewhere around those areas. And yes, this is daily, right? But we're going right straight to the dynamic reactor for a possible rejection. And it seems that that candle is also not helping at this point, right? I want to see a breakout, as we already have, right, with this candle, a multi-candle breakout. So maybe another green candle here, maybe going back down to the support that we just printed here, and then off we go to take at least the next high once and for all, right? So I would be saying that taking this other high previously would make for a better reaction for then create a secondary trend line that might take us all the way up here. But so far, it's not time to start thinking that bullish. I think we need to first go over this little speed bump before we keep moving forward. Other stuff that I'm looking at is just the classic, right? Ethereum, Ethereum, by the way. So it just keeps going downwards. I mean, that's why it's nothing to, it's not surprising me at all. Yesterday, if I'm not mistaken, yesterday or Monday, we're talking about a possible sweep of the lows on Ethereum. Seems like we actually called it right here pretty good, depending which one you're looking at, right? But it was pretty good on the area that we were talking about. We are ranging at this point. We're not having a V-shaped recovery so far as I was expecting. Yes, it looked like right here, but then we're kind of like ranging at this zone. Remember, I was expecting to have also a break to that zero line. We just don't have it just yet, so we are not bullish now. It's time for me just to give it a time. Give it some time before I start jumping back into a couple of trades. But so far, what I want to see here, it is we already have sweep of the lows, right? Something like this. I want to see this high start taking or being taken with a lower high, something like that. And finally, the trend line breakout, which we didn't have in here, but as I am marking right here, let me even fix that one right there. So basically, I'm going to be trying long it after the breakout on the retest, and off we go for Ethereum. Litecoin is another one that is just after its pump, it's just falling down consistently, right? We see repetitive pattern. Look at that sweep of the low. Let me just clear this up. Sweep of the lows, right? Higher low, and then higher high, and then a dead cat bounce. Higher high. So let's be careful because at this point, we could have a secondary dead cat bounce, but there is a little trick in here for you. If you see the same pattern repetition, but the second pattern is shrinking in size, as you can see right here, this means that this pattern is running out of steam. All right. So most likely, instead of just keep going downwards, we could be finding maybe a double bottom, a little sweep of the lows in here before we start bottoming up in here, bottoming down, or finish, stop falling at these areas, right? So do expect something right back at somewhere around 86, 88. There is no way to tell for sure, but so far it seems like we are just following on a downtrend line in here, and we could be ready to start breaking it as soon as we start seeing a better or a higher prime score here. Our consolidation score is rising. That is good when we're in a downtrend. And well, we just need to see our prime score getting higher and breaking through the zero line. Finally, let me take on OM. OM, it is very, very shy. Remember, I was expecting a big breakout in here, but also we talked about that breakout. We made it a little bit more faint because the possibility of that high breakout was fainting, right? So basically, it's already over. Did we broke? Yes, we broke, but we need to be a little bit careful not to be a fake out. I don't think it's going to be a fake out, but still might be not a decisive breakout. Yes, we're above the zero line right now. Technically, our consolidation score is high, but still our prime score is not doing anything good in here. I do think that we still have the chance to go up. So let me just revise my my technicals here, and let's add a little bit of a lower, there we go, bounce to the upside, and then we'll see what's gonna be doing right here. So let me just flat it out. We need to revisit this section right here on OM. Other than that, that's what I'm looking on altcoins. Nothing at this point that really calls my attention, especially since we are printing those sell signals. Remember, we don't enter on sell signals, we enter on the retracements of those sell signals. Unless I start seeing just moving forward to the upside and creating a higher low, well, then that's when I start thinking of jumping into longs for that.
Awesome. Yeah. I want to pull this up here just to show everybody what I'm talking about on this retracement. Because I think a lot of people, they either they don't place fibs right, or they miss out on this, what we're actually seeing. And then it wrecks too many people, in my opinion. Come on, mouse, work with me here. There we go. Thank you very much. I'm going to get this set up here, and then we'll come in and talk about it. Turn the magnet on. Because I want to show you these retracement levels and how they work out for us all the time. There we go. Bring that into there. Okay, let's bring this over and let's talk about this. So this is a fib retracement. There is a little bit of hopium here for you guys. I want to show you guys on the pullback. And so looking at this cycle back here in 2016, okay, pulled from the low back here. I actually caught the very bottom wick here to the top. You can see Bitcoin retracing its bear market back to the platinum pocket, okay? Now, we did have this one rally, and then we started to pull back. This was an early rally. So I do think in a lot of ways, our cycles we kind of look more like the previous cycle than the 2021 cycle right now. Because if you pull a fib from this bottom up to the point where we started to pull back, you'll see we actually caught the golden pocket. And then we had the COVID-19 that pulled us back into another platinum pocket. So if I turn off those 2018 fibs, you'll see we would have held the golden pocket on this micro pullback, this micro bear market, which happened after we bottomed out for the crypto cycle, for the crypto winter. So crypto winter and the bear market, kind of two different things in my opinion. I think the crypto winter is the over exaggerated bear market where we typically see the low lows of the cycle, but we do get these pullbacks, which this here absolutely was a bear market also. Even before COVID hit, we were on our way down, but we bottomed out in the golden pocket. So let's keep that in mind when we look at the next cycle here, because I want to show you that. And let's go in and take a look at the 2022 bottom. That's taken from the low that we had here because this is kind of like a reset after the COVID. And we can bring this all the way back and look at it from this point. It's not going to change much. It was still the 786 for our bottom in November 2022. Okay. But you can see that without the FTX occurrence, which this is where FTX took place, is all of this here, without the Alameda Research, Three Arrows Capital, so on and so forth happening, we kind of held the golden pocket, which would be the 618 to the 0.66. And this is what I'm hoping to see on our next cycle, because if we just take into account what we have here for the top being this 109, 358, and our bottom that we had in November 2022, when I was accumulating all of my Bitcoin, you'll see that we had our pullback in March. We came back and retested the golden pocket. And what I would like to see is that if we do have the institutional interest in Bitcoin and all the big money buyers that now want to get their hands on Bitcoin, to include possibly the US soon, I do think that we're going to see a little lessening, and that golden pocket's going to be a key level. Of course, if that comes into play, guys, we're looking at $47,000 to $51,000 Bitcoin. The last time that I bought Bitcoin after this pullback here, when I was warning everyone of a big pullback, was at $53,000. So this would be just slightly below where I bought last time, and I sold up here at the 102 range, about right there. So looking at this level, if we come back down to here, I would be interested in really going in heavy again around the golden pocket. That's going to be the 618 at 51,329 for our crypto winners. So hopefully we see institutional absorption keep us out of this 35,500 range. Bottom side on that, by the way, $26,000. Definitely don't think we'll see that. Anything's possible, though. It is crypto, and we've never had Bitcoin in a contracting economy environment. So the one thing that I will be watching, though, closely, guys, I will probably start looking at heavily upping my dollar cost averaging here on the $51,329 range. That would be the 618 for the pullback on this retracement. And hopefully it's not that pocket that we shoot for. No platinum pocket, gold pocket. Hashtag golden pocket. That is our goal for our crypto winter this cycle. So, OC, we've got about 15 minutes, man. I did a good little breakdown there. I do think that we will get that pump up to that dynamic reactor and the quantum reactor on the 4-hour. That would put us back in that $89,000 range. For people that are wishing they had got out at 102 instead of round tripping down to where we are now, does that become their window of opportunity? Do we see big sell pressure hit when we hit $90,000? What's your thought? Or do we get people that get super bullish and they FOMO in there, and it is just a liquidity sweep, and then they're trapped again with even more money? What's your thoughts, man?
I think right now it's undefined. Both of those cases are going to play it out. Remember, whoever was able to hold with the last bit of their teeth and their nails is going to try to get out as much as possible, right? Or at least take as many profits as they can if they are going to be on profits. But also, everybody that was waiting to enter, I think they're going to be FOMOing. I believe, because we're coming out of a major high. So the downtrend, it's out of, let me just... on Ethereum. Let me get back to Bitcoin. We're coming out of the major high, which is 108, all the way down here. I
109.3 actually.
More selling pressure. Yeah,
109.3. My video, I did a video that said was 108 the top, and then we came back and did a liquidity sweep to 109.3, and that was the top. So.
Nice. All right. So 109 tops all the way down here. I believe there's going to be more sell pressure than buy pressure, and that is because the people that have been wrecked, it's greater than the people that have not yet jumped in. So far, I don't think there's been shaken too many people out of the tree, and I don't think institutional money is right now interested at this point to get their money, especially with the possible, crypto reserve being built up. So I believe that they want to squeeze as much pain as possible and then buy at confirmed lows before jumping in. So my short answer is going to be farther down. We're going to be seeing a big sellout and a lot of volatility because people jumping in and getting wrecked.
So what is your bottom call what is your bottom call for Bitcoin? What level do you think Bitcoin hits, whether it be a bear market short term and then we get a rally later in the year, or if it's if this is it and we're heading to the crypto winter bear market, the extended, over exaggerated, BS painful bear market? What's your bottom call on that? I want to show us on the chart where you think Bitcoin's going to touch us.
You heard it here first. Bitcoin is going to zero.
There we go. Zero. No, just kidding. Taking a look at what I have here. I need to go daily here very, very quickly. Why? Because yesterday we talked about this, right? And let me just get rid of this. This was a fat finger stuff here. Yesterday we talked about this and where would the bottom be. I would be calling for the absolute bottom being somewhere around 64-ish to 50K. I don't think that we're going to be going lower, and that is because that is the base point where we have seen bottoms, right, before hitting those tops. It is well known that, let me just add this, also open up BTC, and we'll have right here the stock to flow measurement. Guys, this is not a chart for you guys to start calling tops or bottoms. This is a chart to start programming on understanding the flattening out of Bitcoin, right? Look at how we have a big peak and a big bottom, smaller peak and a smaller bottom. Again, and again. So in this case, we broke the blow off tops, right? And what's going to happen here, I believe that we're going to be flattening this one out. Having said that, understanding how we're retracing from the previous cycle to have a little gap to the top, I believe this time we're actually going to be either hitting the top, right, or closing that gap a little bit slightly to the upside. That needs to be measured. I still don't have that actual math measurement. I only have the geometrical measurement, which is, as you are seeing right now, based on this previous range. So the absolute bottom, I would say it's a 55. That will be basically the absolute bottom that I will be calling for Bitcoin, and that is because we're looking to create bigger ranges. And once again, look at the range, the whole range of the market of 17. Then the bigger range, look at how many times this range was bigger, right? 1, 2, 3 orders of magnitude of the previous bull market just represented 2/3 of the next bull market, right? So what do you think is going to happen here? Hopefully we see once again 1 or twice times of this bull market. That will put us basically 1, 2, we're somewhere around here, somewhere around the 138, 150-ish. So I believe that we're going to be coming back out from this bottom as we did on 2021. So, yep, that is my answer.
Awesome. Appreciate that. Shout out to Dave Digital. He said, if we dip below November 5th, 70K, something is broken. Something's been broken for a while, man. It's the economy's broken, contracting economy. Everyone, you can't take what you've seen on the previous 3 cycles at all. You really can't, because those have all been growth cycles for the economy. We have a contracting economy, and we've got the potential for even more risk sentiment coming into the marketplace, and so very easily could break anything that we've seen in the previous 3 cycles. We already started that out with breaking the all-time high before the halving, so something's already broken on it. But yeah, I do think that losing 70K is going to have a psychological impact on the investor side. If we break 70K, that everyone's going to panic hard. And then DDT, valid point. He said, Dave Digital, we can go all the way down to 49K and remain bullish. And he's absolutely correct. Looking at the higher time frames, we would just be setting a higher low at all the way down to $49,000, which is insane to see. It's going to be interesting to see how this plays out. But guys, just stay tuned in here. We're going to break it all down for you. A lot of people got super bullish this morning on the CPI data. I'm the one that threw caution out there to the viewers. So I'm always going to take a level-headed, calm approach to my investing journey. For those that don't know, I'm 52 years old. I'll be 53 this year, and I cannot afford to sit and watch my profits disappear. So I'm always going to make sure that as I'm I'm making my moves, I'm telling you guys. So just stay tuned in here to the morning market report, and you guys will get no hopium dealers, and you'll get real data, and you'll get a real perspective on things from a calm, realistic, logical approach. So, OC, we are pretty much at the top of the hour here. I want to head over to Dano Crypto at the top of the hour, but I know that you've had some charts that you've been looking at there. Let's go ahead and jump in and let's see what you're looking at for some alt trades. Me personally, I would be looking for liquidity sweeps and then enter into on your shorts and then ride that back down from there. That's my approach right now, if you guys are wondering. But not really looking for any longs because I think longs are going to end up getting wrecked over and over and over again, just like we saw today. I bet you a lot of longs got closed out on this pullback already today. So let's jump over, see what you got there. And then also DDT. I would love to have you on as a guest, man. Hit me up, please, either on X, on DM, or in the Discord. I'd love to get you on. You're a great TA guy, and you do some great content on your channel. So I'd love to have you on. Hit me up, man. Let's do it. OC, what do you got for us, man?
So basically, I was looking at gold, and by the way, if you're using gold and you have Market Oracle, make sure you do yourself on trendy here, and maybe use somewhere around 40, 45 here, because it's calling out the shots on the weekly, man. Look at that. I've been looking at this buy entry. Look at that sell entry right here with your dynamic reactor with a redundancy on the trend, man. This been calling the tops and bottoms very neatly. There we go. So something that I was measuring here, and let's make sure that we understand that right now we are in logarithmic. All right, it is the length of this previous cycle here that we were looking at, because for my perspective on the daily, we're just so overextended, right? So let's just measure it in here. It seems like we can still go a little bit more to the upside here. We still have half of the way to the run up here, and based on date or time, the next cycle or the previous cycle was almost 2 years, right? 626. And at this point, we're almost there here. We can still do a couple of movements. I don't want to call for the cycle on gold because there is no actual cycle, but we can see kind of like a pattern break. Buying, selling out, and then ranging, right? Buying, selling out, and then ranging, buying, selling out, and then ranging, and then a big range, right? So let's go back right here to the 4 hours really quick. Let me clear this up. Trading view, whenever you're ready. All right, so it seems like we're not gonna be doing it for 4 hours. All right, so I don't know what's going on with TradingView, man. Come on. All right, well, 6 hours will do, whatever. The point in here, it is that, let me remove everything here. It is, oh, come on, TradingView. So, all right. Just show, yeah, man. I mean, the dynamic reactor, instead of being something like this, it is looking, there we go. But we need to go in the 4 hours. That's something that is not playing out the same. But we are too far away on the 4 hours of the dynamic reactor, and I could be expecting a little bit of a retracement on the 4 hours. So just be careful on gold, because we're having that dynamic reactor making a big gap. I don't know why it's not loading, or finally it's trying to load. But yeah, just be careful on gold. It seems like we're forming a symmetrical triangle. But again, be careful on gold. We don't want to get caught within a losing position, especially not with a dynamic reactor being as low as it is on the 4 hours. So other than that, let me throw it back to you, Piper. I think that I talked too much for this one. So yeah,
it's all good, bro. Yeah, I want to touch on this real fast. This is from CNBC Pro. It's part of the Pro subscription that I look at every single morning. But they're talking about slowdown or recession. It's still not clear, and that's what's got the market on edge. I think once we get a little more clarity, okay, a little more clarity on, are we just seeing an economic slowdown, or are we going to hit a full-blown recession? Then I think that's when that it's the unknowns, it's the undecideds and the unknowns that cause people to sell off because investors don't like the world of uncertainty, right? And so once we get a little more clarity, then we'll start to see, because once we know that it's a recession, you'll start to see money flow into your defensive sector, things like Walmart, things like Costco, Sam's Club, healthcare sector. Those will be where people will start to put their money at. Procter and Gamble is a great one. Nobody's going to stop buying cleaning products and toothpaste, right? So, and once we start to see that money start to flow in, that will be known once we know if it's just a slowdown or a recession. But the S&P is now within roughly 0.5% of a 10% decline from its recent high. That would be a garden variety correction. Thus far, garden variety correction is what we're seeing. And it would be based on one, very rich valuations. The S&P was trading at a multiple of 22 times its 2025 estimates, meaning very overbought, very overextended. And then a modest slowdown in an economy is number two. That's what it feels like. It feels like a garden variety correction as of right now. The economy is slowing, but still in decent shape. But the tariffs are making everyone crazy. I've been joking for a week that the tariff headlines are like having a bowling alley in your brain. Every day you're getting your head scrambled. The tipping agent is going to be for the further decline, okay? Growth declines, but the economy doesn't shrink. In a recession, the economy is going to shrink. And the stock market reacts very differently to the two. Winners and losers, right there, consumer staples. That's those defensive sector things during a slowdown. But if you look here in a recession, top sectors in a recession, consumer staples typically do a 1% gain on the year versus utilities, healthcare. This is dependent on which one you buy. If you're buying the big ones in healthcare, they're typically closer to the neutral or the 1%. But overall, yeah, down 3%, materials down 12%, and you can see here real estate down 22%. So when we start to see a continuation of these housing prices start to come down, and then we start to see those recessionary staples, consumer defensive plays start to come up, then that's going to be a pretty good indicator of where the sentiment is heading. And we'll know a lot more once we see either, hey, is this an economic slowdown? Is this first quarter GDP that we're going to see in the negative going to be just a slowdown, or is it going to be another stacking piece of that avalanche? As that article showed at the top, it showed an avalanche on the hill. Is it going to be just another piece that starts that entire slide down heading for a recession, and then absolutely will start to break lots of support levels below us. And each level, remember, is going to cause more fierce sell-offs and more liquidations, which is just going to compound the amount and the speed of that momentum on the way down. So typically we do see bulls climb upstairs very slowly. We see those sell-offs happen, bears jumping out the windows, okay? So remember, when it happens, it'll happen quick. So you guys got to be prepared. Don't be scared. Be prepared. That is the top of the hour. OC, you got to go do a class. I've got to go and send everyone over to Dano Crypto, but I'll let you go ahead and get out of here, OC. I'm going to jump over to the side cam and walk these people out of the show. Guys, appreciate y'all joining us here today on the Piper Academy Morning Market Report. We're going to be back here tomorrow morning time right here, dropping all of the data. We got PPI data tomorrow, so be ready for that. That's going to be your producer price index, okay? And so we're going to see some market volatility coming in off of that also. If you guys are doing any trading today, just be mindful of the risk management. That's the key to every successful trade. First is your risk management, then it's your entry, okay? So we'll check you guys out tomorrow. Don't forget, tune in today at 4 p.m. Eastern Standard Time for Trade Academy with Trade Intuition. This evening, you may or may not see TradeFi do the nightcap show. And then, of course, Markets After Dark with Lunar Beaches tonight. Tomorrow morning, starting it all over again. We'll be back here. Until next time, guys, trade safe and use some risk management. We're heading to Dano Crypto. Drop the grad caps when you get there, guys. We'll check you out tomorrow.
I don't know what they keep telling me. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall off. I know you hungry for knowledge. knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, form a Mexican spaghetti, yo. Crunch crypto with a deep dive to reject dime. And if you like the visual powered by Car Prime, then you will part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall low. Sound off.
To get with them, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean?